So that's one thing to kind of remember, is unless you've created your own edge and your own strategy, in which case you should, let me just swap over here quickly. So I like to talk to myself. In which case, if you create your own strategy, you should obviously back it up with a lot of research and a lot of testing. Not just back testing, but also forward testing. Forward testing is just as important, if not more important, because it's very easy to look at historical data and say, yeah, I would have sold here, I would have bought here, and in hindsight, have it look as though the trade went exactly the way that you called. But forward testing as well, because obviously you don't know what's going to happen in the future, and if your strategy still holds up during forward testing, then you know that you've got an edge. But the point that I was trying to make was, if you're adopting a strategy and if you're adopting a philosophy within the market, it's important not to take it on face value, but to actually go and do the same research that the strategy or the edge itself is based on, to verify for yourself. And that's, again, not just back testing, but also forward testing. That way it builds confidence within the adopted strategy. So it's not just someone telling you, yeah, do this and do that and works, and then you just go and put money on it. Rather, take the time, if you discover something that resonates with you, take the time and do the back testing, but also do the forward testing to see kind of how the strategy holds up. And like I say, when you do the forward testing on the specific edge or strategy, it creates confidence in it. So next time that specific setup kind of presents itself, you've got enough confidence in the edge or the strategy to take the trade without question. And as soon as you see that setup, you in. So I think that's an important thing to do. So don't just take a strategy on face value. Actually go and back test and forward test it for a decent period of time before you start investing in it heavily. And forward testing, I mean, you don't have to necessarily do it with a live account. Obviously, from a psychological point of view, it's more advantageous to do it on a live account, because on a demo account or a simulated account, you haven't got the same emotional connection to those funds in the account than what you would if it was actual money. So I mean, you can forward test it on a demo account, that's fine. I always think that a demo account is good if you are starting out on a new platform and you're trying to figure out how the platform works. Otherwise, there's no reason to be on a demo account when trying to hone your trading skills, because your analysis side and your psychological side, they work hand in hand. And if you are testing a strategy on a simulated account, it's easy. It's there's no psychological aspect to it, because it's not real money. There's no real sense of loss or gain when trading on the demo account. So if you've got a strategy and you're looking to forward test it, do it on a live account, but obviously don't do it with huge size. Do it with the smallest position size kind of possible. And when you see if you see a good return from the strategy, then look to start trying to increase position size kind of into the future. But build that confidence with the strategy first, and build the ability to take the position without hesitation, and have the psychological backup already in place from having tested it on a live account. Because then the only psychological barrier that you're going to be having to overcome at that point is the position size. So, and when it comes to position size, kind of the general accepted well, not accepted, but the general kind of idea is have a position size that trade with a position size relative to your account that keeps you just uncomfortable enough in your emotions and your psychology. Don't do it where, you know, if the market moves a point, you're going to have a heart attack, but do it just so that it keeps you concentrated on the trade. It kind of keeps you alert, because it's the analogy of if you're driving down the road at 40 kilometers an hour, you know, you can be listening to the radio, you can be talking to your mates, and you don't necessarily have to concentrate as hard driving at that speed. But if you were driving at 120 kilometers down the road, suddenly having a chin wag with your best mate becomes a little bit more difficult, because you find yourself having to focus a lot more on the driving itself. So kind of same with your position sizes. If it's too small, you know, you don't treat it as serious, you don't concentrate as hard. But if it's just at the point where it's becoming relatively uncomfortable to you, you'll find yourself focusing a lot more on the trade, and probably you'll end up managing it a hell of a lot better than if it was a small position size that was meaningless to you. So that's kind of just my 2 cents. None of that is original thinking, by the way. That's everything that I have learned over however long. The day that I come up with something original, I'll let myself know. But for now, that's what I got.